Mohamed El-Erian, Allianz Chief Economic Advisor and former PIMCO CEO. Mohamed, great to see you as always. Before we go specifically to today's market action, I wanted to just dwell on one of the triggers, which was, of course, that inflation print this morning. Some people saying, oh, well, we were all expecting it to be higher than normal. What's your take? Was this actually a very big surprise, the data that we saw this morning?
So it was a surprise. It was much higher than what people expected. Even federal officials have acknowledged it was much higher than what they expected. But the critical thing here is that this is only 1 month, and one must be careful about extrapolating. I think there's a different message going on, Wilfred. It's that it's the concern of higher inflation and a Fed that's absolutely stuck on the notion that it will be transitory and is not willing to be open-minded about it. And what that does, that combination threatens the robustness of the liquidity paradigm. There's a reason why it's not just stocks that are down today. It is stocks, it is Bitcoin, it is gold, it is bonds. It's across the board. This is a liquidity phenomenon. And just like ample and predictable liquidity brought us up and made us better off both on our risk assets and our safe assets, now we're seeing a little bit of what happens if confidence in this liquidity paradigm is shaken somewhat.
And do you think, Mohamed, that the Fed is behind the curve? How many more months of inflation like this would confirm that they're behind the curve and then lead, I guess, to the type of action that you think legitimately spooks investors?
Well, because they've moved to an outcome-based approach under the new monetary framework, it will take many months of high inflation prints for it to be convinced it's behind the curve. I don't think the Fed will prematurely respond. As much as I think they should follow what the Bank of Canada did and what the Bank of England did, they're not going to do that. Their credibility would be at stake. They're going to wait this out. And that's what the market is worried about, is that because the Fed may end up having to slam the brakes, the market will start tightening ahead of the Fed. And that's what investors have to navigate if the inflation numbers remain hot.
Shepard Smith here. Thanks for watching CNBC on YouTube.